In this video, we're going to take a look at the SEC sample paper and the final accounts question that came up in it. So it was question 8, which is a short question worth 6 marks. So it says, complete the following extract from the balance sheet, statement of financial position of O'Gorman Limited as at the 31st of the 12th, 2018. So it says here that depreciation on buildings is 2% of cost. So we have to find 2% of 500,000 for the buildings. So into your calculator, you would type 500,000 multiplied by 0.02, or you would type in 500,000 multiplied by 2 and find the percentage button. And then you would find that the result in your calculator would be €10,000. So depreciation is the reduction in value of a fixed asset over its lifetime due to wear and tear, due to obsolescence, due to, just new technology coming out and stuff like that. So your net book value is what it is your asset, in this case buildings, is worth after it has reduced in value, after it has depreciated. So it is €490,000 there. Then we've got the vehicles. So vehicles depreciation is 15% of cost. So we're getting 15% of 65. So into your calculator again, it's 65,000 multiplied by 0.15, or you would type in 65,000 multiplied by 15 and then hit the percent button. When you do that, you will get €9,750 depreciation for the year, and that means at the end of the year the net book value is €55,250. So that is the sample question for the final accounts, and was question number 8.